Well, good morning, ladies and gentlemen. How's everybody doing? Hope well. Somebody just asked if Doug is on vacation. Yes, he is on vacation. I think he'll be back Monday. Hi, Julie, Gavin, Dan, Carol, George, Ron, Joe, JB, John over here, Thomas, Karen. So today's a big day, right? Today's the day that the Fed's are going to announce their rate hike, whether they're going to do one or not, which I think we all know they are. I would be totally shocked if they did not. Totally shocked. Hello, Stella. Chuck, how you doing? I think our biggest problem with the market right now is, we're talking Fed stuff, okay, is the language that they use, the words they choose. I think that's going to be the big bugaboo. I don't think the market really cares about a quarter point increase. And judging by this morning's little pop, they don't. Now, by the end of the day, that little pop can certainly be down, absolutely down. But I don't think the market cares about a quarter point pop, really. So that language, we want to watch that. So I'm going to, right here yesterday, I'll say relatively early. I don't know what time, but relatively early yesterday compared to the afternoon. I don't know what time, but I put this line up here and I said, this is where I think the market's going to pop to tomorrow, at least early. And we're beating that. We're actually above that area. So I think that's great. The big thing here, the market's going to have to hold this. So we've got a morning star signal set up in the SPY right now. And if we're going to be bullish, that's okay. Let's be bullish, but the market's going to have to hold it, okay? So we're looking at something like this. And holding it can look like this. That is holding it, because the normal action of any chart is up, rest, up, rest, up, rest. The unknowns are, well, exactly how much up and exactly how much rest. That's the unknowns. But as far as chart consistency, trend consistency, this is 100% up, rest, up, rest, up, rest. So this could be holding it. I would be tickled pink if that happened. What I won't like is if we end up doing this. We don't want to do that. I think we're tired of this whole choppy down move and we're ready to move up. So I hope we do. Now, let's make no mistake that looks like today we're going to be popping up over the Trendicator. The Trendicator is likely to turn green a little bit here. But the reality is we're still in a big downtrend. So I think a little caution on your trades. Another thing that I think the successful trader is going to do is be gentle today, not chase, not get caught in that fear of missing out. Because if the market is actually going to trend up, there's going to be plenty charts to trade. If the market is not going to actually trend up, then this move up could turn into a whopper, there we go, whopper of a short setup. So there will be trades, whether they're long or short. Just don't get caught in the trap, okay? So, all right, I'm going to turn this on to real time here. So we're seeing what the market is doing. And you can see there's the candle right there, pre-market. Candle doing pretty good. Nice hammer yesterday. We've got that morning, well, with real time turned off. It's more of a morning star signal. And then we are getting the follow through. That's absolutely wonderful. I think it's fantastic. It's a start. If we take a look at the Qs here, the Qs also did that morning star type signal. We're over the T-line pre-market here. Ideally, we need to move up a little bit higher. To tell you the truth, I think I would have to see maybe the Qs above 337.90. That would be at the bare minimum, in my opinion. And then, if we can get through 350.10 here, this high, by golly, we just might have something moving forward. We just might. So just be picky. Be picky on your trades. Stick to your rules. I've done a lot of writing here recently, putting together. Really, what I'm doing is I'm putting together a couple classes and just kind of getting into this market. And after talking to quite a few people over last week and then first part of this week, trading the trend is the way to go. So if we're going to get bullish, allow that trend to set in there. I think that would be a positive thing. The diamonds here. So the diamonds have actually turned the Trendicator green here. Wow, cool. That's nice. But ultimately, we want to stay above that 336.55 right here. And that may offer a nice little bump up here. I'm just going to split the difference between the 50 period moving average and the 200. 50 is the blue, and the 200 is a simple. So after a low, a high, a higher low, and a higher high, ideally a little bit of consolidation in here, and then an area to start buying something in here would be good for me. Now I'm saying that and kind of eliminating today, because the truth is today with the whole Fed announcements, look, day traders are probably going to be in heaven today. If you're not a day trader, I wouldn't suggest trying to go to heaven today. You really need to bone up on day trading, and you really need to know what you're doing there. It's a different animal. But I bet day traders have just an absolute heyday today. Swing traders, you need to wait for those setups to come to you. Okay, very important. Let's look at IWM. IWM, we're up a little bit this morning, but as you can see, this chart is still very much doing nothing, absolutely nothing. We could draw a little wedge on it like this. This is crazy trading on any chart you look at. This is just crazy trading. This is just, hey, I'm going to buy cheap and hope it goes up, or buy cheap and hope it goes down, whichever one you're looking at. When the best trade there, I think, is likely to be a breakout and then let it test. When it does that, you can see you've got your trend on. And that trend is where long-term success is. Now, I'm not talking about long-term holds. I'm talking about swing trading, but swing trading long-term. So swing trading 1 to 10, 15, 20 days maybe, but 10 years down the road, you want to still be there and be able to do it. If you make your bones and you become a millionaire in 5 years, good for you. You quit if you want, buy an island. There might be some yachts really cheap coming up here, real possible. IYT, take a look at IYT, the transports just simply are not doing anything. We are still in a downtrend. We could make the argument that we've got that wedge in there, which no argument, there is. But trading in here is just absolutely crazy because you're just taking a bet. It's still in that downtrend. We have not broken out yet, and that's what we need to do. Or break down if that's what you're looking at. We'll look at SMH, and we're going to look at 3 charts as possible trades. So SMH, we're still in that downtrend. Could be a bottoming scenario, but there's a lot of times you see, hey, that could be a bottom, right? But it's not a bottom until we actually break out and show positive trading. So we can look at a lot of things and say, hey, that looks like a bottom. Well, I look like a movie star too, but when you come up close, you run scared. So, you know, you got to make sure things work. Okay. So, all right, let's look at. I'm going to look at 3 charts today. If you would like to see the full list, and I think there's 16 of them that I'm adding to the watch list, you can go to the Hit and Run Candlesticks blog, and the full list is right there. So feel free to do that. Please do that, in fact, and make sure you read the blog too. I got to tell you, there's some fantastic information on that blog, and it really, you know, I read it every day, and it really sets the tone to the market. It helps to set my tone, how I want to go. And I do not write the blog, okay? So when I read the blog, it comes from someone else. It comes from Ed. Ed writes the blog. So I see a different perspective, and then on my daily notes, I can write down what I learned from that blog, from a different idea, a different perspective. And it helps keep me grounded, okay? Also, I want to remind everybody that anytime we make trades, we do post on the app. All members and all trial members can get that app. It's free, so if you're a member or trial member, please download that app. You don't even have to be in the trading room. You can be at the dentist if you want to be. You can be robbing a bank if you want to be, and you'll get a text that says, hey, we're buying this, or we're closing this, or we're adjusting this one. Let's take a look at Hertz. Hertz is one of these charts that I think is moving up. Sorry to dive right into that real quick, but need to do that. So I don't think we need this line in there. We don't need to clutter our chart. This line right here, this downtrend line, just put it on some body of the candle or the top of the candle. Let it go where it will. It just happens to go right there. And now you see that downtrend line, and now you see we busted that downtrend line. We've also busted the 50-period moving average. You can see that the Trendicator is green here. You can see the T line is moving up. Now what happens is if you're looking to buy this, if I'm looking to buy this, what I'm going to do is I'm going to look for that entry, and I'm going to wait for that entry. My entry will typically be a trap type entry or a trap breakout entry. My trap, by the way, not only is a 3.8, but it can be a 3.17. I'm willing to do that. That puts the 8 in the middle. It's just a little different strategy, but it's very much the same strategy. I'm still going to look for price action to get me in, and I'm still going to take profits on the way up. This is how you grow your account. Right now, pre-market, I can tell you that we're doing a 3/8 trap breakout. I'll leave that right there. That's a 3/8 trap breakout. So if this is not a trade for you at the moment, or if you miss this trade, if I miss this trade, if I don't get in it, one thing that I think is, and I missed the boat on this a ton, and we're all working to improve. And this is one of the things I'm working to improve on is if you have a chart that is working for you, keep trading it. So I like the way Hertz is set up here. I like this big bullish engulf. I like this base it put in. I like the breakout it's put in. I like the idea of the targets up here. Well, I just might miss this trade right here. Not to worry. I'm going to keep that on the watch list. I'm going to let it set up again. And it will. I absolutely guarantee this. It will set up again. If we pop up, I guarantee at some point it's going to rest again. It's going to rest again. And when it rests again, then I will look at buying that right there. Ron is pointing out, I assume it's Hertz you're pointing out. It's up 5 days. Actually, not so much, Ron. Not so much. Here we're up 1 day, 2 days, 3 days. This right through here, that's rest. That's rest. That's not up, that's rest. That's a perfect scenario. Perfect. So low, up, rest, up, rest. That's what we're looking for. So up, those are great charts. Rest, and now we can start looking to enter that. And if we miss that entry, you'll get another chance. Let's look at CLF. There's a lot of these CLF, we're going to skip XCM there, but you know these steel companies. I think here's RS I have on the list. NUE, that's one right there. But we'll just stay here with the XLF for now. And again, you can go to the blog and you can pick up the full list here. So you see how we've rallied up right through here. And this is where somebody says, oh, shucks, I missed the trade. Doggone it. No, you didn't. That's the trade you want on your watch list. So here we are moving sideways. Got to admit, a little choppy and sloppy in here. But let's just focus on what we have here. We have support. We've tested support, a nice hammer. We're putting in a little doji pre-market here. That certainly could be a buy for somebody. I'd probably rate a little bit after the open, not right away. But if this starts to climb higher, this becomes that trade that we're looking for. I want to see bulls coming in. And it can happen right here too. I want to see those bulls coming in. Now, as we move up here, we could certainly see a little bit of resistance. But if we look at this chart, we want to stay with charts that are doing the job right. And anytime you have a low, high, higher, low, higher, high, it's doing the job right. That's doing the job right. So while this absolutely might be some kind of resistance, doesn't mean that it's going to clobber this stock and blow it out of the water. Also, it doesn't mean that we can't give this up, and then if we have that breakout, trade up in that area. Okay, I'm going to pick one more here, and then let's look at CrowdStrike, and then that'll be it for today. So CrowdStrike is starting to trend up. It's a bit, you kind of have to twist your eyeballs to see it, no doubt, because it just, it's down, it's up, it's down. It's like, what's this thing doing? So let's see. Does a weekly chart help? A weekly chart might help. Look how we have the low. Here, let's draw this out. See how we have the low, the high, higher low. We actually came to a higher high and then to a higher low, or almost double bottom there. And now there we are. So a little choppy, but I think this is starting to work right in here. Back to the daily chart, you can see we have the 3/8 strat. You can see that we're above that 50 period moving average. And look at that rounded bottom breakout there. Now, for those that get the rounded bottom breakout, you understand the power of moving from one major moving average to another major moving average. You understand that. And when you understand that, your trading can just explode when you understand that power. So here we have that rounded bottom breakout, and here we have a 3/8 trap setup. We can clearly see it needs to get above these highs right in here. Now this is where you have to manage and trade your chart. So, okay, as a reminder, if we buy anything today, could be something this morning, won't be anything near the whole Fed release, could be something later today. I'll certainly send out some ideas throughout the day on the app. I will absolutely do that. And then we'll see everybody, okay? You guys take care. Thank you very much for listening in. I appreciate it. Thanks for being here. And we'll see you all in about 15 minutes. Take care.